even if you have perfect timing, perfect timing is far and few between, being able to sell the high and buy it back in.
What would you say is the biggest frustration when it comes to either yourself or your clients wanting to exit these high positions when Bitcoin was near $68,000, $69,000 a coin, and they have this huge capital gains tax? What's the biggest frustration?
Yeah, and that's we see these people on Twitter, and crypto Twitter is very, very big, and they're all talking about how they're trading in and out of Bitcoin and all of this. And it's scary that nobody thinks about the tax consequence, right? I mean, you have to have special tax software that tracks every time you move cryptocurrency. If you have several wallets and you're moving the cryptocurrencies between wallets, the government may think that's a sale because they don't know that you control all those wallets. And that's something you have to go back and you have to prove to them what were actual transactions and what were internal transactions, right? And so we spend a lot of money ourselves to be able to track all of our transactions, buying, selling, moving from different custodians, that type of thing. It's very intensive. And for individuals to have to do that, it's almost impossible. I mean, there are some small investors that have done thousands of transactions that are going to find themselves in big trouble with the IRS. And then the other part is, even if you have perfect timing, perfect timing is far and few between, being able to sell the high and buy it back in. But if you're trading that way and you're selling and buying after you take in the federal tax consequence, right? At least the federal government would give you a break on long-term capital gains. But as you mentioned, both of us are here in California, and California doesn't give us a break on capital gains, right? They tax it the same regardless if it's short or long term. So you have to be so right to be able to pay tax, invest your after-tax proceeds back when it's lower, let it go up again, sell it, and then pay taxes. It's nearly impossible to break both beat the market and the tax man. I don't know.
Yep. So can I defer capital gains tax on the sale of Bitcoin? The answer is yes. And we're about to talk about that right now with Peter. In fact, we are talking offline about this, and we have a deferred sales trust client that's looking at the his fund and different ways to diversify from his real estate holdings. And what's really unique about the deferred sales trust, Peter, is that we can now exit highly appreciated cryptocurrency. In fact, we just did a couple deals before Bitcoin took a big hit here. At 54,000 a coin, we exited 5 million for a client. She worked for a big tech company in Silicon Valley. Had about $50,000 worth of Bitcoin, then went to 50 million. She exited 54,000 a coin, deferred about 1.85 million to tax, and it's typically 20% federal. State of California is about 13.3, and then you can have the Obamacare tax of 3.8. So it could really add up to about that 37% mark, which is huge. And so, what does that mean, Peter, for those that are listening, right? If you can now exit at the high and not have to suffer the tax consequences, defer the tax, and then be able to turn around and buy real estate at the low, or diversify into other investments, equity markets, or buy back into Bitcoin when Bitcoin hit 20,000 a coin, right?